In the books of uh, Delhi head office, or in the books of head office, we have the branch stock account. Then there's branch debtors account, a branch expenses. We don't need the branch petty cash account, the branch adjustment account, and the branch profit and loss account. Okay. We don't need the petty cash or the cash account because nothing has been given to us with regard to the opening balances or closing balances or any other transactions except this cash sales and cash received from debtors, which is directly sent to the head office. So it won't make any difference. Okay. So let's begin. We have the opening balance of stock 1st April 2006 to balance brought down 72,000. So immediately on this, we need to calculate the loading. Okay, and the loading is shown in the adjustment account, or the profit element is shown in the adjustment account. 1st April 2006 by stock reserve, by stock reserve. Now, if you see here, the percentage that is given to us is stated on cost, that is, it's 25% on cost. It's 25% on cost, which means 1/4 on cost becomes 1/5 on selling price. 1/4 on cost becomes 1/5 on selling price. Okay, so it's going to be 1/5. The amount is 72,000 into 1/5. That comes to 72,000 into 1/5 is 14,400. 14,400. Similarly, we have the opening balance of debtors 51,500. 1st April 2006 to balance brought down 51. Then we have goods sent to branch at invoice price. So on 31st March 2007, be careful of the dates, 2 goods sent 2 goods sent to branch account. 2 goods sent to branch account is 6,49,200. Immediately on this, we need to calculate the loading because they've said invoice price here. And even if they're not said invoice price here, we know that the transfers are made at invoice price because of this. Okay, selling price, which is 25% above cost. So buy goods sent to branch account in the branch adjustment account. On 31st March 2007, buy goods sent to branch account. This is the loading. We don't need to write it as loading. The fact that it's in the adjustment account, it's understood. So it's 6,49,200 into 1 by 5. Into 1 by 5. That comes to 129,840. 129,840. Okay. Then we have goods returned from branch to head office. This is on the other side now. 31st March 2007. Buy goods sent to branch account. This is when the branch is returning goods to the head office. Buy goods sent to branch. This is 12,840. And again, we need to calculate loading on this. In the adjustment account, 31st March 2007, 2 goods sent to branch. I told you, even though it's a branch sending it to the head office, it comes under the head of goods sent to branch. Whether it's the head office sending to branch or the branch sending to the head office. So 12,840 into 1 by 5. 12,840 into 1 by 5 comes to 2568. Comes to 2568. Next, cash received from debtors. This is going to come in the debtors account, 4,20,000. By cash, by cash, 4,20,000. Uh, Discount allowed to debtors 11,500. Now be careful with discount allowed. Since it's an expense, also it's going to come in the branch expenses account. Okay. So by branch expenses, discount allowed, which is 11,500. 11,500, and the same thing comes in branch expenses on 31st March 2007 to branch debtors, discount allowed, which is 11,500. Then we have the of expenses that are paid by the head office, which are the expenses of the branch, salary and wages. Even though they are paid by the head office, we are trying to find out the total expenses of the branch. That's why we are taking them here. To salary and wages, which is 25,000. To printing and stationery, 18,000. And there's still another one. Insurance, 17,000. To insurance, 17,000. And then we have the credit sales, 4 lakhs. Now, credit sales will affect the stock account as well as the debtors account. The credit sales will affect the stock account as well as the debtors account. And hence, we have to show it in both. So, in the stock account, since goods are going out, it will be by branch debtors, in brackets just to identify what it is, credit sales, which is 4 lakhs. And here we have 31st March 2007 to branch stock credit sales 4 lakhs. And then we have cash sales 2 lakhs. Again, cash sales doesn't affect anything except if we had a cash account, but we don't have a cash account. By cash sales, which is 2 lakhs. And finally, we have the closing balance of stock. Always leave 2 lines, okay? Because you don't know which side the balancing figure may come in case there's a surplus or this or a shortage. And I said closing balance should always be the last item. So by balance carried down, 96,360. And on this we have to calculate the stock reserve. So to stock reserve, 96,360 into 1 by 5. That comes to into 1 by 5. 19272. 19272. Okay. So now we start closing. Like just to recollect what we had gone through yesterday. The head office can send transfer goods to the branch either at cost or at selling price. Okay, we have still not done problems where the transfers are made at cost under this method, but in case the transfers are made at cost, the balancing figure would normally be gross profit. Now, when they're transferred at invoice price, okay, uh, I explained to you why the balancing figure cannot be gross profit, because the branch adjustment account, we have the branch adjustment account where the balancing figure is gross profit. So the balancing figure here is gross profit, it cannot be gross profit here as well. Because all the profit elements are in the branch adjustment account. So gross profit is calculated there. So technically this account should tally. Technically, this account should tally. In case it does not tally, how we had problem 18. In case the branch stock account does not tally, we either have a shortage or a surplus. Okay, like yesterday's problem, this was higher than this, we had a surplus. Okay, so today let's see what is higher. I think it is, I think the debit is higher. Let's just check. 6,49,200 plus 72,000. This comes to 721,200. 721,200. Okay, 721,200. And then the balancing figure here is minus 6,12,840 minus 96,360. We get 12,000. 12,000 is the balancing figure. Now this 12,000 is basically, since this is higher than this, the debit is more than the credit, it's a shortage. Some shortage has taken place, maybe goods have got lost somewhere. Okay, some destruction has taken place which has not been taken into account. Now this shortage, again, since we are talking about stock, again 12,000 is the invoice price. The balancing figure 12,000 that we have found here, 721,200 minus all this, it's 12,000. Again is that invoice price, and hence we need to bifurcate the two. Okay, so the how we are going to bifurcate? So we have by the balancing figures go to two places, or the 12,000 goes to two places. By branch adjustment, or I'll say profit and loss first, by branch P&L account, and by branch adjustment account. Okay, in the adjustment account, we are going to take 12,000 into 1 by 5. 12,000 into 1 by 5, which comes to 10, 2,400. So that basically means this is 9,600. How do I get 9,600 here? 12,000 minus 2,400. So calculate the load first, calculate the profit element first, and the balancing figure would be cost. So basically these goods, this 12,000 goods of worth of goods that have not been taken into account, the actual cost of those goods was 9,600 and the profit element is 2,400. Okay, so transfer this accordingly in the respective account. So it will go in the adjustment account as two branch stock account, which is 2,400. And in the P&L account, we are going to have on 31st March 2007, two branch stock account. Basically, one is the cost of goods. This 9,600 is actually the cost of goods, which are lost. That's why it's on the debit side. It's like a loss that has taken place. Is that clear? Okay, so this, in case there's a balancing figure, it can either be this way or this way. But whatever it is, get the total and then check what is the profit element and divide it accordingly. Like this. Okay. So we have here balance carried down is the figure that's missing. So by balance carried down, which is the balancing figure, is sorry, this total is not correct. 4,51,500, 4,51,500, 4,51,500. Okay. And the balance carried down is the new balance is 4,31,500. So I think it would be 20,000. Yeah, the closing balance of debtors would be 20,000. Similarly, the branch expenses, we total all the expenses. This will come to the total of this would come to 71,500. 71,500. 71,500. And we transfer the entire all the expenses to the profit and loss account 31st March 2007 by branch P&L account, which is 71,500. Okay. So if we say by branch P&L account there, here it will have to be two branch expenses, 71,500. Close the branch adjustment account. The balancing figure here is either gross profit or gross loss. This is higher, so we have a gross profit. 129,840 plus 14,400 comes to 144,240. 144,240. So here we have a gross profit of, not gross profit, I will say, since this is coming to the branch profit and loss account, to branch P&L account. In brackets, I will show it as gross profit. So that comes to minus 2,568 minus 19,272 minus 2,400 comes to 1,20,000. Bring this down. 31st March 2007 by branch adjustment, which is the gross profit. This comes to 1,20,000. So we finally have a net profit, overall net profit, 1,20,000, 1,20,000. So the net profit goes to general profit and loss. This is the balancing. That comes to 38,900. 38,900.